All right, so now that we know how to identify order blocks and we also know how to understand the flow that they're currently in, what we want to do now is start, pinpointing potential trade ideas and even back testing a little bit so you guys can see how it works in real time. All right, so let's find some areas. For an example, we know from structure that we're looking for price to make higher highs and higher lows or lower highs and lower lows. Okay, so if we look at, for example, this point here, we know that this was a higher low that led up to a higher high, but then we got a bullish bearish bullish continuation pattern. We didn't really get a 2 candle pullback. This was sideways movement, doesn't count. This was also a 1 candle pullback, so it doesn't count. So overall, this higher low led us up to this higher high here. Now, if we drew a line from down here, you can see, oops, try that again. All right, so if we draw a line from that low here, you can see on this push, price broke this level, okay? So that now means that we're only looking for sales in this market. And I'm pretty sure this was a daily level or something that pushed us and transitioned us. But nonetheless, with us now knowing that, we would normally have our H4 zone here, right? Which is perfectly fine in this case because you see it actually got hit. But this was a bearish order block that pushed the market down. So look what happens now if we move the zone down to the block and up to the wick. Now we can easily see, sorry, let me just get it accurate. So now we can see not only did price retest it here, but it also retested it perfectly here. Okay, so a lot of times in the market, price is retesting the order block. It's not actually retesting just the wicks or the liquidity. So on the webinar, I explained how trend lines are created. Trend lines are created by order blocks being retested. So for example, if you have descending order blocks, they're not going to retest the same exact level, or that would just be consolidation, but it's going to start retesting a little bit lower each time, a little bit lower, which is going to push the market down in a certain direction. Okay, so nonetheless, we have the order block here. So what we're going to do now is drop down to like the 3-minute time frame and find our entry points that we could have taken this trade. All right, so it's not different than what we're already doing. The only thing now is incorporating and remembering, if you see an order block or so on. All right, so you can take entries off the 3-minute or the 1-minute or the 5-minute, doesn't matter. Just keep in mind the longer, the higher the time frame you're taking the entry from, the bigger your stop loss is going to have to be. All right, so you can see price had some kind of trend line here. And let's see. Looks like there was also some potential trend line like this. Nonetheless, they kind of break at a similar time. We get that retest, and then we get the bearish engulfing here. All right, so that bearish engulfing is the first entry that you could have taken. All right, and in this case, to protect your stop loss on GJ, I usually say around 30 pips. But with trading order blocks and understanding once they get retested, price is going to move away rapidly. You can start lowering your stop losses now. They should be protected now because your entry should be basically that wick that's retesting the order block, and then you're going to see price fall away. All right, so it gives you more confidence than potentially just taking a random zone trade and you don't know if it's actually going to respect or not. All right, so from that entry point, we're at about a, 1-to-6 risk to reward trade. All right, so price fell extremely quickly from this area. All right, so that was one trade. Look what happens when price comes back to that same level. It almost gives us the same exact entry. We now had a trend line leading up here. We get the break, retest, bearish engulfing. And we also have another, nah, because that's 4 candles. So this was the best entry point, the bearish engulfing here. And once again, like a 14 pip stop loss or something like that. And you can see price literally crashes. All right, so this one hit over a 1 to 6 risk to reward trade. And this is simply with our knowledge that we already had about the zones, but now incorporating order blocks as well. All right, and this happens over and over. So what I meant by the trend line like ascending is this exact formation. For example, we form a bullish order block that now is going to retest a little bit higher. So we're retesting the demand that was created with this order block. We're not going to retest the wicks every time, or else price would literally be consolidated. It would just move sideways. Okay, so we have to start making higher low points, and the way we create those is by order blocks being formed that get retested a little bit higher each time. So what we can do now is draw our order block like that, and we understand this is our normal zone, but we understand this is also an order block. So now we can go on the 3 minute. Let's go to that area. All right, let's see where we're at. All right, cool, we're close. All right, so our zone was created off of this order block here. Okay, so price leaves, it comes back. And once again, all we're looking for is for price to tap our level and give us a trend line break. Okay, so here's the first time price came to the level. And what I want to ask you guys is, did price break any trend line here? Is there any trend line we could have drawn here? And also, this is actually the 1 minute. So let's go to the 3 minute. So 29th of March. Okay, here we go. So when price came to this level here, did price break any trend line? No. So that's your first sign that the price is not ready to transition yet. Okay, so now we consolidate, coming back to the trend line. And here, we actually start pushing down into the zone. Now look at the difference also. These are wicks tapping the level. If you guys remember, we want to see an actual candle hit our zone. Okay, now look what happens when the candles actually push into our zone. Price starts pushing out rapidly and start forming bullish order blocks. So remember, this happens on every single time frame. Now, we now have a wick here and a wick here. Okay, so we had a point A, point B, and we broke out here. We did not form a bullish engulfing. We did not form a bullish engulfing here either. Instead, we consolidated and then formed a bullish engulfing here. All right, so you could have taken it off of this candle here. If you understand how the market's moving, you could have even taken it on the breakout. And from there, once again, to get yourself under price, you literally only have to use a 12 pip stop loss, or these way smaller amounts, if that makes sense, because you're getting so accurate with the entries. Now, when you're first trying this out, go ahead, give yourself extra room so that you overall understand, um, and are more comfortable with seeing how the market plays out. But as time goes on, you can get to the point where your stop losses are literally under 10 pips, because you see where we enter, we usually don't have drawdown. All right, so nonetheless, for this entry, that was almost a 1-to-7 risk to reward trade there. All right, and you can see if we zoom out, price never came back to our entry point. So depending on how long you wanted to swing this trade, you could have potentially got a 1-to-14 or 1-to-15 almost risk to reward trade. I'm sure the market kept going as well, which it did. So you guys are able to now see how accurate these levels are. Okay, so hopefully this video cleared up some of the questions you may have about how do you actually enter off of these levels. So I just showed you guys 2 sell entries off of an order block, as well as a bullish retest entry off of an order block as well. And when you look at it like this, you can see how crazy this risk to reward looks and where we're actually getting in on these moves.